this is Jim Juback for Juback Asset Management YouTube video on Wednesday, February 5. We're in the, basking in the post-Groundhog Day glow. I celebrate Groundhog's Day. It's a very important holiday for me because it marks the this is the roots of the holidays. Basically, it marks the transition, the midpoint between the winter solstice, the darkest days, and spring equinox, when we can all start to feel like flowers are about to bloom. So if I feel that if I can get to February 2nd, I've got a good chance of seeing spring. Now, the groundhogs were kind of mixed this year. Punxsutawney Phil said 6 more weeks of winter. Boo, Phil. The Staten Island groundhog said 2 more weeks of winter. Yay, Staten Island. We don't have groundhogs here in Venice, which is where I live at the moment. And when I talked to I took a survey of the old men and women who sit around the campo in the late afternoon sunshine. We've had 50 degrees in sunshine recently, and asked them, hey, when are we going to see spring? How long is winter going to last? They basically said, who knows? Let me have another spritz. So anyway, that's where we are. If you like this video, please give it a thumbs up, subscribe to my YouTube channel. That way you get notification when we do our next one. If you want more of my stuff, more my stuff free, you go to my free site. That's jubackpicks.com. That has 3 portfolios, 18 months, 5 years, and dividends, and a post or 2 a day. Or you can subscribe. That's jubackam.com. That has 5 portfolios, those 3 plus a volatility and a really long-term portfolio. The volatility portfolio I think might be really interesting right now. I just added a couple of option plays on the VIX on the idea that volatility is going up in this market because of uncertainty. So anyway, you can subscribe to that. And last but not least, I moved to Italy in September of 2023 and started a Substack called We Moved to Italy. My wife and I moved together. And it's free on Substack. Just go there and search for We Moved to Italy. Would love to have you as a reader and follow our adventures. Okay, today's topic is the Fed is between a rock and a hard place. Here's the Fed's problem as I see it. The Fed wants to get inflation down to 2%. Inflation right now, depending on how you measure it, is around 2.8%. And it hasn't been falling. It's basically stuck there. So the Fed, on its January 31st meeting, said, hey, we've got so much uncertainty and we don't see a real pressing need to do anything right now, so we're going to pause. Market didn't like that, but market basically said, hey, a pause for 1 quarter is not bad if we then go back to rate cuts. And we're still looking, Wall Street said, we're still looking for 1 or 2 interest rate cuts in 2025. Now, the Fed may not be looking for 1 or 2 interest rate cuts in 2025. The Fed may only be looking at 0 or 1 cut. We won't know what the Fed is thinking until at the March 19th meeting, the next Fed meeting, we get an update on the dot plot projections. In December, because these projections are done quarterly, the Fed said, hey, we're looking at a Fed funds rate of about 3.9% at the end of 2025. Current Fed funds rate is 4.25 to 4.50%. So that basically is like 1 or 2 interest rate cuts. The question is, when the Fed updates it in March, is it going to say still 1 or 2 for 2025? Is it going to say 1 for 2025? Is it going to say 1 to none for 2025? This all makes a big difference for the market. The problem that the Fed has right now is that the Fed knows where we are, but it doesn't know where we're going. Fed is looking at the uncertainties of the Donald Trump tariffs, which in typical Donald Trump fashion have been imposed, taken back, reordered, rescheduled, whatever. No one knows exactly what the rates are going to be or who's going to be affected by them. And the Fed is going, hey, we know that tariffs are inflationary. They force up prices for U.S. consumers. We don't know what the picture is there. Second thing is that it looks like the Republican Congress is going to pass a renewal of the 2017 Trump tax cuts. Estimated cost of this is about $5.5 trillion over 10 years. The Republican majority looks like it's going to be doing some magic math so that this doesn't really show up on the books, but they're still going to have to raise this money in the bond market. The way you raise more money in the bond market is you pay bond investors higher yields. So the Fed looking at that is saying, okay, that's more pressure upward on rates. The tax cuts themselves are likely to be stimulative, so maybe we don't need to add a whole lot of stimulus to the economy. We don't know what it is that we want to do because we don't know what's down the road. We also don't know what the budget is going to look like. Congress still hasn't passed a budget for the fiscal year that began in October 2025, and it's now starting to debate the budget for the fiscal year that starts in October 2026. No one knows what that budget is going to look like, if it can be passed. We've got a debt ceiling that we've exceeded. The Treasury is now trying to figure out ways not to go over the limit. It looks like they can probably keep below the limit by doing what they call extraordinary measures until the summer, but there has to be a debt ceiling reauthorization or repeal or whatever. All these things mean the Fed is trying to make monetary policy in an environment of huge uncertainties, and big political pressure. If the Fed doesn't say at the end its March meeting that it's going to cut rates, the White House is going to stamp its foot and say, we must cut rates. Rates are too high. Donald Trump has already said that. He's also said that he knows more about interest rates and inflation than anybody at the Fed, including Chairman Jerome Powell. So the Fed knows this. The Fed knows about political pressure. The Fed is trying to do, in economic terms, the right thing. This is not a fun time to be running the Fed. So that's the picture as I see it. Fed funds rate makes a big difference for the stock market. If we're looking at an up year or a down year in 2025, it's probably going to depend on what the Fed does on rates. So thanks very much for watching. If you like this video, please go to YouTube, my YouTube channel, and give it a thumbs up. Subscribe, that way you get notification when we do our next one. If you want more of my free stuff, you can go to my free site. That's ubackpicks.com. 3 portfolios there, 12 to 18 month, 5 years, and dividends. That's free if you sign up. So it's basically for your email, so we can send you those alerts every day. If you want to pay me money, which I'd love, you can go to my paid site. That's ubackam.com. And there you've got 5 portfolios instead of those 3. So it's those 3 plus a volatility portfolio and a really long-term portfolio beyond 5 years. And you can find links to those down below. You can also find the link to my Substack newsletter called We Moved to Italy. We can follow along my adventures since my 2023 move to Italy. I'm now in Venice, where I'm probably going to be for the next year or so. I know it's a terrible, terrible thing to have to live in Venice, Italy. Okay, you got pigeons and stuff. But somebody's got to do it. Anyway, so thanks for watching, and talk to you next time. Ciao.